Questions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your hosts, Mark Trice and Jesse Hamilton.
Well, good morning, everyone. It's a great Saturday morning. I hope your day is off to a great start. You're joining and listening to the Spend Life Well Show, where we apply biblical wisdom to your financial journey. I'm joined in the studio today by my co-host and fellow financial professional, Jesse Hamilton.
Hello, everybody. Welcome to the Spend Life Well Show.
Hey, today's verse in Scripture is from Proverbs 3, verses 5 and 6. Trust in the Lord with all your heart and lean not on your own understanding. In all your ways, submit to him, and he will make your paths straight. That's one of my favorite verses, Jesse. I love that one because I have a tendency to go off and do what Mark thinks.
Yep.
And I got to always be reminded that I need to consult the Lord and to consult Scripture when I'm making decisions about anything, let alone financial decisions. But folks, this is a special episode. Well, every week's a special episode, right? Because they haven't kicked us off the air yet. You can call us right here in the studio with your financial questions or any comments you want to have. Lots of stuff going on this week. You can visit us and call us at 512-452-1120. That's 452-1120.
Yeah, Mark. So the last month has given us quite the stomach-churning ride in the stock market. We got news that the first quarter growth of the U.S. economy shrank for the first time since 2020.
That's a big deal.
Yeah, that was tough news. To top it off, on Wednesday, the Federal Reserve decided to raise interest rates by 0.5%. And that's going to make a big impact on a lot of things in your life, whether you're borrowing or how you spend money. So we're going to dive into what that means for you. That's just going to cause a whole host of problems for borrowers. But we want to know what you think about these events. So as we're talking about them and the news this week, give us a call. Tell us what's on your mind. 512-452-1120.
You can also send us an email at radio@spendlifewell.com, and we will answer those on the air or get back to you within 24 hours.
Yes, we will. So we have a very important event coming up right after our program today. Directly after the show, we're going to do a monthly update, which we do every month, but this one's special because of how challenging the markets have been over the past few weeks. We're going to do a deep dive into what's really happening in the markets and how it might affect your portfolio. So this is an interactive webinar after the show where your participants, if you guys want to join us, we will answer your questions live, pull up some charts of different funds and things that you guys are interested in, and really try to explain what's going on in the market right now.
There's so many things, Jesse, that you can't, radio doesn't lend itself to showing a chart.
Totally.
So we like to be able to pull those things up so you can see how your portfolio is doing and some steps that you need to take with that. They just need to go to our website, right?
Yeah, spendlifewell.com/events, and you'll find the link to register. And if you log in after the show, you might even just join us live. But that's spendlifewell.com. Super easy to just join live using your computer or your phone and tune in to hear what we have to say about those charts.
And if you can't make it, go and register.
Yeah.
We'll send you a recording of that next week sometime. So if you register with us and give us your email, we will simply send that to you next week. And don't worry, you're not going to be put on a spam list somewhere with that. So, Jesse, this is a very special weekend for moms.
Yes, it is, Mark. That's a big deal.
And your mom came into town this week to see you. I don't know if she was trying to give you a hint
She
or what.
she did. I'm really happy to be hosting them at my house, but originally she said I had no idea that I was visiting on Mother's Day. It just happened to be the right day. And then a few weeks ago, she's like, "Wait a second, I'm going to be with my son and his wife for Mother's Day." So that's super
Well, that's
exciting. We're
awesome. That's
happy to
awesome.
host them, and we're going to enjoy some really quality time today and tomorrow.
Well, I'm sure you have lots of fond memories of things that mom has taught you throughout the years, and
Yes.
I want people to share that this week. If you got a fond memory of your mother and something that you find yourself doing today because of what your mom did, whether it be financial, I don't care what it is. Give us a call here in the studio, 452-1120, 452-1120. We'd love to reminisce about that a little bit. But first, Jesse, we've got to jump into the news of the week. So there's some big
Yes.
news this week. That came from the Federal Reserve.
Mhm.
And we always watch our buddy Jerome Powell when he gives his briefing of the meetings of the Federal Reserve. And they raised this Wednesday the short-term benchmark rate, which is kind of what banks are charged overnight, by 1.5%, one half of 1%, one half of
Mhm.
1%, after doing a 0.25% raise back in March, right?
Right.
So that was a big deal, and we were watching the markets. The markets had gone down at the beginning of his speech, and but gone down about 1%, right? And then
They
by the
had.
time the speech was over, the markets closed up almost 3%. That's a wild swing for one day.
Yes.
And it was all on the nuances of the words that our buddy Jerome was saying. And one of the things that kind of set off the market was that he said that a 0.75% rate hike was not on the table. Now, he didn't clarify, did he?
No.
Of Was that today? Was that next meeting? And the markets overreacted, of course, and really didn't listen to what he was saying. Really, what he had to say was actually quite hawkish, right?
Right.
It was very much we got some problems here. We don't know how they're going to pan out. And so the
And,
next day,
Mark, a hawk is somebody who likes a higher interest rate environment, right?
right, right, doves are like lower interest rates, and we've had low interest rates for a
Mhm.
decade. And so that's going to cause some problems with the economy. Let's talk about some of those things, Jesse, because
Well, I just think it's hilarious that people reacted the way that they did to the intraday market price of the S&P 500. We're going to talk about that later in our webinar about people who don't really understand what's going on. They just swoop in to buy the dip and make a quick buck. We see that happening quite a bit, but I just think it's funny because Jerome Powell does have a very eloquent way of speaking things that sound pleasant, but essentially what he's saying is, you thought I was going to punch you 3 times, but I'm only going to punch you 2 times. So let's all be happy.
right, right. And it's what we saw on Wednesday was the high frequency traders and some exchange traded fund trading desks really pump up the price.
Hmm.
And that sounds kind of odd that they would do that, but they can actually artificially try to get the price pumped up. And we
Yeah,
saw what happened the next day. All those same people decided to take their profits and unload their holdings in
which
those
causes
funds.
the opposite problem.
Right, and I can't remember, the Nasdaq was down, almost
Over,
5%, over
yeah, over
5% on
5%.
Thursday. That's crazy moves. So what kinds of let's focus on the rise in interest rates. What's that gonna do to certain types of lending and borrowing, saving? Let's visit about that a little bit. And
Sure.
we wanna hear from you too, because do you think the Federal Reserve is doing enough to tame
Mhm.
inflation? Do you think that the Federal Reserve is doing enough to tame inflation, or should they do more? Give us a call. We want to know what you think. 452-1120. We'll call right in the studio and we'll put you on the air, and we will hear what you have to say.
We would love to hear how you think this interest rate hike might affect you in your daily life. I know
Let's talk about some of
a
those
lot
things.
of people out there. borrow money for a lot of different reasons. Most of them are very valid, like borrowing for your house, getting a mortgage. Some people borrow for a car. A lot of people have revolving credit with credit cards. All of those things are affected by this hike. And you might not understand why, but it's a big deal that at the very top, an interest rate is increased, and it's just going to trickle down to every borrowing instrument that you have.
Yeah, not so much to your savings account, but certainly to
Right.
things. And one of the big areas, Jesse, that we have seen is the rise in mortgage interest rates.
Yes, huge.
I mean, we're talking about, at the end of the year, you could still get a sub 3% 30-year mortgage.
Yeah.
And we
And
did
you're
some
lucky if you
searching
did.
yesterday. Yeah, you're lucky if you can get in the fives.
Yeah.
Now, we saw one rate the other day that an average rate that was for someone with a typical credit rating that was good, but and not super good. We saw a rate of 6.25%.
Wow.
6.25%, and that's huge.
That's double what it was
Yeah, and
maybe 9 months ago.
yeah, and that's what's happening here. And Jesse, I want to go to my example there that I wrote up for you
Okay.
about housing affordability. Now, this was some research that I did when I was in grad school on studying housing affordability, and this really means that someone can afford the average price on with the average certain type of income and so forth, and how does the interest rate change
Mhm.
for that? So I picked, in Austin, Texas, and this is not extremely accurate, but in the Central Texas marketplace, the median house price is now north of $300,000. Okay, and we're seeing that many median incomes are rising, but not fast enough. So we're going to pick a typical potential home buyer that's making $60,000 a year.
Okay.
Now, the lenders want to, and we can have a lender call in if they want to,
That
and
would be great.
correct my facts, 452-1120. But it used to that you didn't want to see a debt to income ratio that was greater than 36%, meaning that all of your debts relative to your income every month could not be more than 36%. Now, there's lenders that will go higher and things like that. And we saw, in the housing crisis in 2007 to 2009, we saw those ratios go up north of 50%. But assuming that someone has a typical average debt to income ratio and they make $60,000, that means that the lender's liable to basically say, you can afford an $1,800 a month principal and interest payment.
Mhm.
Okay, $1,800. That's important for our listeners to remember. $1,800. The median house prices in Austin is around $300,000. So if I can afford $1,800 a month for my mortgage payment at 3%, which it was at the end of the year, 3%, a 30-year fixed rate mortgage at 3%,
Mhm.
the principal and interest on that is $1,265.
Okay.
Okay,
1265, yeah.
1265. And remember, my debt to income ratio, I can afford an $1,800 a month
Mhm.
payment, right? If that rate goes up to 6.25, which we saw that this week, 6.25, that same 30-year mortgage is not $1,265 a month. It is now $1,847 a month.
Ouch. Pushes
Now
you over the threshold.
this was before taxes, um, private mortgage insurance if you have to have that. This is for
Mhm.
taxes, insurance. And so what once was affordable for someone making $60,000 in the last 4 months, that house is no longer affordable.
Hmm.
This is a big deal.
So incomes are not changing at the dramatic rate that the interest rates are. Because if you essentially doubled your interest rate, you would think, hey, that would be great if I could double my income. But it doesn't work like that.
That's right. I mean, incomes have been rising, but not at the pace of
Totally.
inflation
Hmm.
and not at the pace of rising interest rates.
Yes.
So this is huge. This is a big
That is
deal.
a big deal for people at
And
an everyday level.
we're already seeing, we track, sometimes the realtors will tell us that they'll track the amount of inventory on hand, the average days of inventory.
Hmm.
We're seeing that, anecdotally at least, that it's taking longer for people to sell their houses, and they're not getting as many offers. And a lot of it has to do with the fact that, hey, we may not be able to afford this house we want. So what we're going to see is probably a little bit of a slowing. And I'm not saying a dramatic drop off in house sales, but we're going to see a little bit of a slowing until incomes can catch up with that. But a lot of people now, because of interest rates have risen so fast, people can't afford that median house price anymore.
So between those two numbers, though, Mark, 1,200 and 800 over the interest rate hike, does that mean that the mortgage lenders are just making a killing?
Absolutely not. I mean, they have to be able to make money on the mortgage themselves.
Mm-hmm.
That's the going rate. And if they want someone to buy their mortgage, they're going to have to pay. They're going to have to pay someone a reasonable price, because it's like a bond. You're selling a mortgage, it's like a bond.
Yeah.
So hey, when we come back, we'll talk about some fond Mother's Day memories, fond memories of mom. We'll talk more about the economy and the markets. We ask you to stay tuned. You're listening to the Spend Life Well Show. We'll be right back.
Take the Bridge Austin with you wherever you go. Download the mobile app. Stream the station live. Listen to the podcast and have all the great Bridge content in the palm of your hands. Just search for the Bridge Austin in the app stores.
Welcome back, everyone. You're listening to the Spend Life Well Show. I'm your host, Certified Kingdom Advisor Mark Trice, and my co-host, Jesse Hamilton.
Hello.
Today, we've been talking about the economy a little bit, and we'll talk more about that throughout the show.
Mm-hmm.
It may seem a little bleak that, this was the highest interest rate hike in 22 years. It's the highest inflation rate in 40 plus years, and the market's going nuts. But there always is a message of hope here, and it comes from our Lord and Savior Jesus Christ, because he gives us that hope. And of course, through God's word, it gives us direction on our financial situation and what we should do. So we always encourage our listeners to seek out the answers in Scripture, and also seek the professional advice of someone that you trust. And we love helping people, and we want to encourage you and help you along your financial journey in any way we can. Maybe it's through listening to the show. Maybe it's through giving us a call.
Mm-hmm.
You want to talk right now, you can give us a call at 452-1120, 452-1120. And Jesse, give us that web address that people can go to register for a very important webinar that we're having right after the show at 9:15.
Yes, give us a visit at spendlifewell.com/events. Or if you just want to go to spendlifewell.com, you can see our website. You can see the events tab up there on the corner. Give it a click and register. We won't spam you or anything. We just want you to join us and maybe have another conversation about what's going on.
Yeah, we're going to deep dive in there. We're going to get into a lot of things we can't get into on the radio. So if you're not able to join us, go ahead and register. We'll send you a recording next week sometime so you don't miss anything. So, Jesse, tomorrow is Mother's Day.
Yes,
And
it
so
is.
this is for our listeners. This is your final warning for all husbands, all children that
Just make
are
sure you don't do nothing.
right. Exactly. You need to do something. And I was funny. I was talking to some of my teenagers this week, and talked to them on Monday. I said, "Hey, I'm traveling a lot this week. Can you help me out? What do we want to do for mom?" And I can't tell you what it is because she might be listening. But I said on Monday, I said, to my eldest, I said, "Can you take care of this? You just got to go online and do it, right?" "Yes, I'll do it right now." I didn't see her much throughout the week because she was busy with finals and work and stuff. And I got her in the same room yesterday afternoon late. And I said, "Hey, have you taken care of that yet?" "Oh, no, I haven't. I've been busy." It's like, so.
Wow, you don't love your mom.
I didn't want to put that guilt on her. But no. Jesse, do you have? I'm sure you have fond memories of things
Yes, I
that mom
do.
has done for you. I was thinking of one the other day, just yesterday actually. I was buying some work boots for my 13-year-old. We're introducing him to the concept of work and the yard and
Hard work.
and the farm and stuff. So I remember when I was a little one. Now, some of our listeners can identify this, and if you were in this situation, we have counselors standing by to walk you through your grief. But Jesse doesn't remember this, but a lot of folks, we bought my blue jeans at Sears. And there was a brand, Jesse, called Tough Skins.
Okay.
Tough Skins. Now, you've never had to endure this, but they were really tough, like hard cloth, almost plastic-like. And I remember my mom, she would always buy a couple of sizes too big. She would always buy a couple of sizes too big, and guess
So
what
you
I
could
got
grow
to
into
do?
them?
Huh?
You got to
So I
grow
could
into them?
so I could grow into them, yeah. But I had to roll up the bottoms of the legs, otherwise they'd be dragging on the ground.
That's
And I
cool now.
yeah, I hear it is. But back then, wearing tough skins, that was enough as it was, just as a stigma. But then to roll them up, and I didn't, get upset with my mom, but I remember her doing that as a way to save money,
Hmm.
because when you're a kid, there's years where you grow like a weed. I mean, we had one of our boys this last year grew by like 6 inches.
Wow.
And so you got to do that. And Jesse, I have to confess, I did something similar yesterday
Okay.
with my son and buying boots. Well, he wears a size 10 and his older brother, wears a size 13. So I know they're going to grow, right?
Just make
And
him wear a bunch of socks.
well, yeah, that's what I did. I bought 2 sizes too big just so I would save a couple of bucks down the ride, because I know he's going to grow, right?
Yeah.
And that was just kind of reminded me, because it kind of made me remember things my mom did
Hmm.
growing up to try to save a little money or try to make ends meet and things. And I think a lot of our listeners probably had the same experiences, but it kind of reminded me of my mom. I lost my mom about 5 years ago to cancer, and we, desperately miss her and stuff. But if she's listening in heaven today, she can maybe get a smile from me remembering that thing that she used to do. But
Hmm.
we like to hear those stories from you. It is Mother's Day. You can call in and say thanks to Mom, and tell us what you think and what she did for you to help you along your way. Our number here in the studio, 452-1120, 452-1120. Jesse, what about you? You got a memory of your mom? I mean,
Yeah.
she might be listening today, so it better make her cry.
She might be listening. I don't know if she's, but actually, yesterday we were driving around town, and I love my neighborhood, but we do not have a neighborhood pool. And same thing growing up, great neighborhood, but we didn't have a community pool in the neighborhood. So we subscribed to a little club down the road. It was called the Dolphin Club. And
Sounds
so
like fun.
it was so much fun. Every summer evening and weekend, the family would all get in the car, pack up the towels, and go down to the pool. And so I remember a lot of fond memories we were talking about yesterday of summer evenings at the Dolphin Club, being a little kid, jumping in the pool, cool down. And she put me in swim lessons, and she was talking about how I hated swimming lessons because I was 3 or 4 years old, a little too early to be really competitive. So she said she was telling me a story yesterday about tossing me in the pool as they blew the horn for the race, and I had to paddle to the other side as like a 3-year-old. So lots of fun memories there at
Yeah.
the club. So really good family time and things I'll remember forever.
Folks, we like to hear how you remember Mom. 452-1120, 452-1120. It doesn't have to be about finances or anything, but we just want to honor moms and say thank you. If any of my children are listening, you better get on it and get ready. You've got less than 16 hours to get ready to praise Mom, honor Mom, and tell her thank you. Well, Jesse, we've been trying to avoid this for the first segment of the show, but let's jump into what happened in the markets this week. And really, since we were off last week, the week before was worse. How did the month of April end up with the stock market?
It was a challenging month for sure, Mark. We had a lot of volatility, and if you just give me a second.
Jesse, did you put your computer right next to the microphone because you are frozen? We'll wait till Jesse gets back here. So it was a volatile month. I believe the S&P 500 was down about 8.8%. And, that's a big jump after already declining some. The S&P 500 is down I think, over 13 or 14% now year to date. And Jesse's back now. Jesse, you there? Jesse can't hear us. Okay. So the S&P 500 is down quite a bit year to date. I'm going to pull up my numbers here, and we will look at that together. The S&P 500 is down over 13%, almost 13.5% year to date. You're probably seeing effects in your portfolio,
Yeah,
and
Mark, sorry about that.
that's all right. That's all right. We just talked about the S&P being down 8.8% last month and down 13.5% year to date.
Yes.
So go ahead and take over.
Okay. Well, if you guys have covered the S&P 500, let's move on to the NASDAQ. Have you covered that yet?
No, but that's what everybody was invested in last year because the tech stocks were hot.
They were really hot, and they kept growing and kept growing and growing. But the thing about the interest rate hike is that these companies use so much debt and leverage to function. They sure do make a lot of money, but they use a lot of debt to do it. And something that's going to happen to them is they're going to have their margins cut because they're not going to be able to afford the debt like they used to. And that's going to make a multi-billion-dollar effect on each one of those companies. So let's talk about the performance. This week, the NASDAQ was down 1.54, but we saw some of the biggest swings we've ever seen, including a 5% up day and a 5.5% down day, back to back.
That's pretty scary.
Yeah, that's a big one. And something we're going to talk about in our webinar later is you might not want to be in these companies, but you probably are. You probably don't have control over, if you're in a target date fund or a blended mutual fund or a balanced fund, you have no choice but to own a large portion of these companies. Facebook, Amazon, Google, Tesla. They're so volatile. They're so profitable right now. They're making money upon money upon money, but they're so volatile.
Well, I want to encourage people to join us on that webinar right after the show at 9:15. You can go to spendlifewell.com/events and register. Even if you can't join us, register. You'll get a recording later on. Or if you've got concerns right now, give us a call here in the studio. We're talking about lots of different things. Give us a call, 452-1120, 452-1120. We've been talking about honoring mom. We've been talking about the craziness in the market, rising interest rates, and all sorts of fun things. Jesse, how much is the NASDAQ down since its peak in November?
Well, year to date, the NASDAQ is down 22.37.
That's bear market territory.
That is bear market territory, very comfortably a bear. But if we go back to November 22nd, which was the peak of the fall of last year, and we go to the close on Friday, which is a new low, we're surpassing 25% down.
Ouch. And we'll cover this in our webinar later, but that new low broke a resistance point that we think is quite significant. And does that mean there's more downside risk here? We don't know. There is a high propensity to continue on down. We may have a bounce here every once in a while, but that is a signal that says, wake up, wake up, pay attention to your portfolios. And like Jesse said, you own those. If you have a 401k, guess what? You own it. You own those big tech companies, because most of those fund managers by prospectus have to own those big companies, because when they were making money, you didn't want to miss out, or they didn't want to miss out.
They didn't want to miss out. They didn't want to miss out for their 2021 performance measures for their statements.
That's right. So if you think about that, I don't know what the NASDAQ up was last year. The S&P was up a little bit over 25 or 26%. And the NASDAQ has really given that back.
Totally. So let's talk really quick, just briefly, about small caps, because you probably own some small caps too.
Yep.
They tend to be fairly volatile. These are companies that might not even be making a profit. They're smaller companies that have gone public, and they might have a lot of growth potential, or there's some exciting breakthrough technology, but they generally aren't value stocks that have been around for a long time, producing great revenues and dividends. So as you could probably guess, they're down.
Yeah,
You-
and that's so many people own those,
they
and
do.
they've been really struggling for a long time, long before a Russia-Ukraine war, long before
Hmm.
we saw rising interest rates, and
Right.
people don't realize these things happen behind the scenes. But I'm reminded of the parable of the talents, Jesse. You have to take ownership
Hmm.
of your investments, of your savings, and make sure that you're doing something to make them grow and certainly to protect them.
And
Um,
the argument of 95% of this industry is small caps are a great place to make some gains every once in a while. So you should own them when those gains come. But the
yeah.
thing is, they're not working right now.
And hindsight's always 2020 for these broker dealers and fund managers. I mean, we go back and we can say, well, you should have done this, and you'll
Hmm.
see all the pundits on TV now. It's like, well, you
Yeah.
should have done this. I was talking about it, and no one ever goes back and tracks back what those people said before. You need to take ownership. Only you can control what goes on with your investments and things.
Right.
Jesse, what about bonds? Because with rising interest rates, you're going to see bond portfolios really suffer. What's been
Hmm.
going on with the 20-year Treasury?
Man, they have been suffering. The thing about, I hate to keep bringing it up, but once again, we're going to cover this in depth in the webinar about the bond seesaw. And when rates go up, prices go down. And we're seeing that happen as we speak in the market. But 20-year Treasury, right? The safest place you could possibly be. Everybody wants to own some bonds in their portfolio for safety,
Or
but
at least people tell you to.
people tell you to. But what they're not telling you is we hit a low on Friday for the first time, a low that goes back to even 2019.
Yeah.
So we're talking about lows that go years back. That we follow an index here for the 20-year Treasury bond, and that index is down 23.2% year to date.
Wow. Wait, that's supposed to be the safe stuff, right? That's what the industry tells us, that if we want to lower our risk with
Hmm.
stocks, we're supposed to put money into bonds. Well, guess what, folks? Both are going down. Both are going down, and you need to wake up and pay attention. Go out and pull out of the junk drawer, because that's where you put your quarterly statements. I know you. You pull them out and let's talk, because we need to take action. You need to take action with your portfolio. We want to talk about your portfolio. Give us a call here in the studio, 452-1120. Jesse, sometimes I think that people don't want to call up because they're embarrassed.
That's okay.
And putting our head in the sand, that's not the thing to do. The right thing to do is take charge. We're called to be good stewards of the money that we've been blessed with. We need to take charge of that. So
Yep.
that music, Jesse, means that we are coming up on a break. When we come back, we'll talk more about Mom and all the things she's done for us. We'll also talk a little bit about more of the economy, and we'll listen and answer some questions from our listeners.
Sounds good.
You're listening to the Spend Life Well show with Mark Trice and Jesse Hamilton. We'll be right back. Did you know the Bible talks about money and possessions over 2,000 times? Well, maybe we should pay attention. Hi, I'm Mark Trice at Clear Vista Financial. We work Jesse,
with
don't
clients
forget to
with your
launch
resources
the
based on a
free
foundation.
webinar slideshow.
Learn more about Clear Vista Financial by visiting our website at spendlifewell.com. That's spendlifewell.com.
Securities through Cambridge Investment Research, Inc., a broker-dealer member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Smoky Mo's Barbecue is serving up delicious barbecue for those lucky enough to live in Cedar Park, Austin, Round Rock, Georgetown, Leander, Liberty Hill, Conroe, Bernie, New Braunfels, and San Antonio. Excellent food to the smiling faces. Smoky Mo's Barbecue. Find your store at smokymosbbq.com.
Hi, I'm George Mendoza with Thrive Mortgage. Buying a home in today's competitive market can be difficult and overwhelming. Offer after offer denied. You need an experienced local mortgage lender on your side that sellers and agents trust to get the job done fast and efficient. That's why buyers count on me, George Mendoza with Thrive Mortgage, for all their mortgage needs. So if you're ready for your offer to stand out above the rest and secure the home of your dreams, give me a call at 512 264-5720 or visit me at mendozamortgages.com. NMLS 1779698.
More than 1,100 homes and buildings across the Central Texas area were destroyed by tornadoes in recent weeks, leaving our neighbors to pick up the pieces. The Austin Disaster Relief Network asks for your help to give them the resources they need to repair, rebuild, and recover. We're raising $2.5 million for the long-term recovery effort, and every donation matters.
Jesse, is there anything else you want to cover in the market update?
ADRN.org/helpctx. That's ADRN.org/helpctx.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
You're listening to the Spend Life Well Show. This is our final segment. Your chance to call into the studio with your questions. Or if you just want to say thanks, Mom, for something. Tomorrow's Mother's Day. You can give us a call at 452-1120. It's really kind of cool. You know, you can call up Mom and say, hey, Mom, you're going to be on the radio. And tell her thanks. You know, I'm so thankful for my mom and all the things that she had done for me as a child, as an adult. And we certainly do miss her. But Jesse, was there anything else you wanted to visit about with the market update?
I think we covered it with bonds. That being said, the bond market is just struggling, and you probably own some bonds. So like Mark said, I encourage you to pull out your statement and just see what you're invested in. There's no need to be scared of it.
Yeah. I mean, it doesn't mean that you're in a disaster zone. I mean, there's always hope here, but you do need to take control of it. You know, so give us a call here in the studio. We'll talk through that with you. 452-1120, 452-1120. And don't forget, right after the show here in about 30 minutes or so, we are going to have our monthly update. We're going to dive deep into what's really going on in the market. You can send in your questions about a ticker or a stock or a mutual fund. We'll let you know how it's doing relative to other things. And then also, too, we can answer questions that you may have on your mind with that. So, Jesse, I know we got lots of questions this week.
Yeah, we got a couple of messages to our email. I guess some people are more inclined to send us an email than to talk live because I don't know why, if they're shy or they think that we're going to make fun of them or something. But
no, because if you've done something that you feel silly about, we've probably done the same thing. Give us a call here in the studio, though, 452-1120.
So I want to take two questions that we got in our email this week. This one's for Jackson, if you're listening.
All right, Jackson.
So he asked, I'm going to paraphrase here his question, but he said, I was not an adult in the 80s, but it seems like these financial issues that we're facing today are bigger and worse than ever before. Is that true?
No, but we don't have a lot of adults don't have that memory. I mean, interest rates or inflation, hasn't been this high since the early 1980s. Jesse, you weren't even really a figment of your mom's imagination.
I was an idea.
Yeah, and so a whole couple of generations have not even lived through something like this. But I want to make sure that people don't panic that, hey, we've been here before. We know what may happen. There's lots of different possible scenarios. I can't tell you. I've probably read a dozen articles this last week, Jesse, with everyone's prognostication of what is going to happen.
Mm-hmm.
And the reality is we kind of know what could happen, but we really don't know. One of the things we're going to share in the webinar is we're going to share all the different experts' forecasts that they had for the S&P 500 at the beginning of the year, and we'll see where we are today.
Right.
But it's like no one really knows. We do know that high inflation and a slowing economy, because we forgot to mention that week before last we got the gross domestic product figures for the first quarter, and it was down, meaning the economy was shrinking. What was that? What did the economy shrink by in the first quarter? Jesse, do you have that number?
No, I don't have that
Oh, okay.
that
All right.
figure.
I think it was like minus 1.4%, and they were expecting a slow growth rate, but certainly not negative. So when you combine rising inflation or high inflation and a slowing economy, this
Okay.
is where we get to use the ugly word stagflation, right? Stagflation. And we haven't experienced that since the 1980s, early 1980s. And that was a tough time. A lot of people lost their jobs. The Federal Reserve created a recession on purpose to
Yeah.
tame inflation, and you had a slowing or shrinking economy. So it was not a fun time. But, we've seen that before. History, what did I say one time? History is the study of how we never learn from history. Yeah, I mean, we've seen this before. So I don't think it's any cause for panic by any means. We should not be storing up our emergency reserve food and things. Although there's been some stories about, I read a story this week about shortage of baby food
Oh,
on the
no.
shelves. Yeah, but no, we should not be going into the bunker and doing our doomsday prepping for anything like that. We've seen this before, but it is going to be a time. Jesse's never lived through this. I mean, I really haven't lived through this. I saw the impact with my parents having to have a 13 or 14% mortgage.
Yeah.
And seeing their, having to stretch a dollar. That was when I was wearing the tough skins, man. That's what mom had to do. And I'm so thankful for that I was able to witness that and observe that. Because a lot of people don't realize, and for those of you with children, your kids are going to learn about money from watching you.
Right.
And if it's we charge everything, don't worry about it, we'll get whatever we want, man, that's not probably the best thing to teach them. And, no, I didn't enjoy wearing the Sears tough skins, right? But I'm so thankful for that because it taught me to, respond in a way that's going to stretch my dollar, and probably many of you. But I would love to hear from you, 452-1120. What are you doing? What are some of the things you're doing to try to fight inflation with your own budget?
The question that I get all the time, Mark, from my friends who want me to put my financial advisor hat on and answer with a macroeconomic view is they say, well, when is 2008 going to happen again? And I couldn't tell you, but my response to them is specifically in the housing market, we're not going to see that unique failure. We won't see it again. There's lots of other points for the economy and the whole economic system of the world to fail, but I don't think it's going to happen from that specific issue of lousy mortgages compounding into financial instruments that cause collapse.
I mean, they're still out there, but not at the magnitude that they were in 2006, 2007. And at the same time, and you did a good job of phrasing your response, because at the same time, we don't want to say that this time it's different. There is some element to that. But I do think, the Fed is a little bit behind the curve. The Federal Reserve is behind the curve. They were, even with their comments and their press release, they were really trying to calm us.
Yeah.
And if you recall, Jesse, one of the first things our buddy Jerome Powell said was it was a statement to the American people.
Yeah, he said, I'd like to address the American people like he's the president or something.
Well, he's doing more than the president's doing. Oh, no, I shouldn't have said that. But, he was trying to calm fears. And he went a little too far because then the market makers and high-frequency traders and stuff took advantage of that, I think, and ran out the prices real fast that afternoon.
Yeah.
We're sitting there watching that, and one of our rules is we never want to trade something significant on a day that Jerome is speaking, right?
Right. We watch it very closely.
Exactly. We watch it. We'll make decisions the next day, but we knew that big of a run up was going to have a sell off, and it sure did. So to answer Jackson's question, I know it was a long-winded way of answering his question is, no, we shouldn't be concerned. We should be taking action and dealing with the circumstances that we face. So, stuffing your 401k statement in the drawer and ignoring it and, praying that it'll come back someday is not the right approach. But so many people do that, Jesse. They just don't want to deal with it. And I think that's just because they don't have a trusted advisor.
Mm-hmm. That's a great way to damage your mental health too. Just stuff it in there, forget about it. Not an issue.
Yeah, no, I mean, this is one of those things you don't want to ignore. And you may not know who to talk to. You can give us a call. I mean, we're happy to talk to you here on the radio, 452-1120.
Mm-hmm.
And, I was joking about, people that had to wear tough skins, that counselors are standing by, but that's kind of what we do as advisors. We're counselors. And a lot of times we just have to talk people down off the ledge that it's not as bad as it seems, but you do need to take action. And I'm afraid, Jesse, that there's a lot of people out there getting bad advice right now because the media, the talking heads on the business channels and things, and maybe your financial advisor is telling you, remain calm, all is well. Remain calm, all is well. It will come back. And this time, it is a little bit different in that we have a falling stock market, a falling bond market, and people need to wake up or they're going to have their savings wiped out. And that's not to alarm anybody. It's just to say, hey, please look at it. Get some advice. Talk to someone about what's going on in the economy and what you need to do.
Mm-hmm.
So, Jackson, if you're listening, pick up the phone, give us a call here at the studio. We'll talk to you, or you can call us anytime during the week at 800-491-4508. And really the easiest way is to go to our website at spendlifewell.com, spendlifewell.com. You can register for future webinars and events and things. You can ask us questions. You can schedule an appointment. So Jackson, that's a great question. My answer is remain calm. You remember what movie that's from, Jesse? You're a little too young. That was Animal House.
Animal House.
Kevin Bacon said that when he was getting trampled by the crowd after the parade. Anyway, so yes, we do need to remain calm. We pray first. Go to the scripture, go to the Lord in prayer, and seek wisdom about what you need to do.
Mm-hmm.
And we as biblical financial advisors want to help you in that journey. Please give us a call or go to our website. And we've got a few minutes left for taking calls about mom.
Yes.
Or questions about your portfolio. Jesse, I think we had a couple of questions from this week, didn't we?
Yeah, we had a couple. Another one from a listener named Ellen.
Ellen, okay.
So if Ellen's on here, she emailed us and said that she's frustrated with working. She's in her early 50s, and she's been saving like crazy, but she's looking for an opportunity to retire. And she just wants a good metric on how much money she needs. And she said she's heard of the 4% rule. And I think this resonates with a lot of people right now. They want the yes or no button to see if they can retire because they're frustrated with working.
Well, Ellen, I think first and foremost, you're asking the right question. You should be thinking about that, even if it's, you're not going to retire next week. But oftentimes we'll have people come in and I've told this story before that someone comes in, they say, I want to make sure I have enough to retire. And I go, great, we'll help you do that. But, when do you want to retire? And they say, well, I just gave notice. And that's not the time for that. But hey, Jesse, we're going to get back to Ellen here in just a second, but we just had a caller call in. Robert, you're on the air. How can we help you?
Hey, I just want to say that I really, really appreciate what you are doing. It's my first time hearing the show, and I've learned several things this morning. So grace and grace be upon you. And I know a lot of people are being helped by just listening to you. So I just want to say that, I'm okay. Otherwise, I do have your website noted. So if I need something more than just what we're talking about casually, I'll be sure to give you a call on that too.
Well, thanks, Robert. I appreciate you calling in. That made our day.
Mm-hmm.
It's better to give than to receive, and I really appreciate your Christian spirit and what you're doing. Thank you so much.
Hey, thank you, Robert. Have
Thank
a
you,
great
Robert.
day. Have a great day.
Okay.
So, that was cool to get that little pep talk here toward the end of the show, and we hope that you're getting something out of the show as well. If you want us to keep talking, we're happy to do that. You might want to let the Bridge Austin know that you're enjoying that show, the Spend Life Well show. You can give them a call anytime there at 452-1120, not just when we're on the air. We thank Robert for calling in. And let them know that you're enjoying what you're hearing, because we want to make sure we get that feedback and improve the show how you would want to improve the show. So back to Ellen. Okay, Ellen wants to retire, and there is a lot of information out there, but I think one of the biggest things that's been kind of changing right now, and it has to do with the bond market, is we've been in this 40-year cyclical bull market for bonds, and that is coming to an end.
It's numbing to people. They think this is just going to keep happening.
Yeah, I mean, we get so convinced that the market only goes up, and in this case, that bonds only go up, and we are near the end of a 40-year cyclical bull market in bonds, where bonds only go up, and people are about to get a wake-up call, because the 4% rule used to be based on the typical portfolio of a retiree, of a balanced portfolio, or maybe a moderate portfolio of, say, 60% stocks, 40% bonds, Ellen. And that the rule was, hey, if you only withdraw 4% over a period of time, you'll just be fine. Well, what we're seeing is that maybe you can't withdraw that much. Maybe you need to adjust that figure. And we don't really stick to that arbitrary rule in our office. We're looking at performance every year. We have a glide path for our clients about how much they can withdraw of it, but we may need to adjust it. We may need to adjust it from time to time, and you may need to increase it. We may tell you need to decrease it. So it's a long process, a lifetime. But you're asking the right questions, Ellen. How much do I need to retire? And a good rule of thumb is you need to make sure that you've got enough funds there to last a long life. And for someone that's 50 years old, you may spend another half of your adult life in retirement, and that's a long time. And we know we have a lot of clients that are state employees, maybe they're teachers, and they can actually retire a little bit earlier than some people and get a pension, but that pension is fixed. And so what you get today, if you retire today, is what you're going to get 20 years from now. And so you have to be careful. And I don't think, like we talked a couple weeks ago, Jesse, there's not really any scripture in the Bible dealing with retirement.
Nope.
Right? And so maybe, Ellen, you think about what's going to happen in the next half of your life. It may not be, going in and clocking into work every day. It may be doing something different where you still make a little money, but not as much as you did. And that creates a lot of flexibility. I think we're seeing a lot of people want to experience that. The pandemic, Jesse, has really forced us to rethink how we work. And so that's a great way to end our show today.
Yes.
Jesse, what's that website again?
spendlifewell.com/events.
Register for our webinar. That's
We'll
coming
keep
up
the
here in about
conversation
20
going.
minutes. Yeah, let's keep talking, folks. You can give us a call anytime during the week at 800-491-4508. We hope you have a blessed weekend, a wonderful Mother's Day. Be sure you call Mom and let her know how much you love her. Have a great day. You're listening to the Spend Life Well Show.